Warren Buffett is sitting on almost $360 billion worth of cash, and inflation is eating away his money every single day. Since the beginning of this year, the S&P 500 surged by at least 14%. So Warren Buffett missed the opportunity to make $40 billion of pure profit. And if you count the last couple of years when he also was sitting on so much cash, he could have at least made an extra $100 billion that he missed. Berkshire Hathaway's pile cash today is larger than Apple and Microsoft combined. The valuation of these two companies is a staggering $7.5 trillion. So what exactly is going on? Did Warren Buffett lose his edge? Or Warren Buffett is positioning Berkshire Hathaway for the greatest opportunity of the 21st century? So if you're ready, give this video a thumbs up and let's find out. Warren Buffett still holds a lot of great companies at his disposal, but he has been massively selling a lot of his stocks. However, the valuation of all Berkshire stocks are valued at a little over $300 billion, while his cash position is almost $350 billion. In 2019, his cash position was only $128 billion. Over the years, that cash position began to increase year by year. Only in 2022, his cash position was reduced again back to $128 billion from the previous $146 billion year, which means that in this year alone, Warren Buffett only started massively buying stocks. However, since then, he continued his strategy of massively selling off stocks, and since then, he has doubled his cash position by the end of 2024 to $334 billion. This number today stands at around $350 billion. In fact, Warren Buffett could have invested a lot of that money back when the stock market crashed in April of 2022. And since then, the market has grown by at least 30%. So he could have actually made probably around $100 billion in such a short period of time. But Warren Buffett chose to ignore that crash, even though that it presented once in a lifetime opportunity. In fact, if you look at his activities for the past 2 years, you will see that he was consistently selling stocks. Yes, he has bought a few stocks in Bill and Melinda Gates Foundation and a few other companies. However, other than that, in the second quarter of 2025, most of his activities were red. Most of his activities was selling a lot of stocks. The same thing applies in Q1 of 2025. Yes, that was when April happened. That's when the market crashed and Warren Buffett was on a massive journey to sell a lot of his stocks. The same thing happened in the last quarter of 2024, in the third quarter of 2024, and so on and so forth. Yes, you can see a few picks that Warren Buffett made in the second quarter of 2025, but these are small investments that Warren Buffett made, nothing actually significant. And it's very clear from his cash positions that you see that has been rising each year. Some people made the argument that Warren Buffett simply lost his edge, especially since he was planning to retire as the CEO of Berkshire Hathaway and he's now simply the chairman. But he's actually still sticking to his old strategy, and Berkshire Hathaway continues Warren Buffett's strategy. Because if you look at Warren Buffett's indicator, which he called as the best way to value the entire stock market, the entire stock market is extremely overvalued to a degree that most people cannot possibly comprehend. His indicator is very simple, that you take the entire valuation of the US stock market and you will simply divide it by the gross domestic product, or GDP in this case. So the valuation of the stock market literally depends on when you're taking that number, since the entire market fluctuates all the time, but it's an average about $67 trillion right now. $67 trillion divided by $30 trillion, which is the GDP of the United States, that number might be slightly higher at $30.5 trillion. But that small difference isn't going to make any huge difference, because the final number is going to be above 200%. In this case, it's 223%. which means that the stock market is overvalued by 123%. Because if that ratio would have been 100, then the stock market would have been fairly valued. So according to Warren Buffett, we are witnessing one of the greatest overvaluation of the market probably in the entire history of the stock market. Even during the dot-com bubble, when the stock market was going through the roof, that overvaluation was at 150%. Now take 150% and compare it to 223%. And then you realize that even when the stock market dipped in April of this year, yes, it was on one side once in a lifetime opportunity, but even at that 2nd of April when the entire market tanked, it was still a very overvalued market.
Certainly, in the next 20 or 30 years, there'll be 2 or 3 times when it'll be raining gold and all you have to do is go outside. But we don't know when they will happen, and we have a lot of money to commit. And I would say that
So according to Warren Buffett, in the next 20 to 30 years, there are going to be a few opportunities where you simply have to go and buy everything and you're still going to make a lot of money. But he doesn't seize that opportunities yet. You see, if you look at the stock market, you will see that it's just filled with opportunities every single day. It doesn't matter whether you are investing at the peak of the market or when the market is completely crushed, there are going to be opportunities regardless, because that's the nature of the market. But the opportunities that can earn you billions of dollars happen once in a lifetime, or not once in a lifetime, but probably much more frequent than that, once in 5 to 10 years. And that's what Warren Buffett is waiting. Another big problem that Berkshire Hathaway is having right now is risk versus reward. When you're throwing your few $1,000s or maybe hundreds of thousands of dollars, or some of you who are sitting with a few $1,000,000, that's actually not a lot of money, even though that for you it might be a lot of money. The market is worth trillions of dollars. It's very different when you're investing a few $1,000,000 or even a few $1,000,000,000, and when you have to allocate $350 billion. With that much money, you are actually taking a staggering huge risk, which means that you have to be much more careful. Yes, on one side, the rewards might be huge on one side, but on the other side, you are investing $350 billion, which means that Berkshire Hathaway has to be a lot more careful than the average investor who is there with just a few $1,000,000 or even with just a few $1 billion. If it was a couple of billions of dollars, I don't think he would actually be sitting on that much cash, but investing $360 billion. Now, I want you to put yourself in his position. You're sitting on the top of $350 billion or $360 billion. What are you going to do with it? On one side, you can look back and say, look at Apple stock, look at Nvidia. But Warren Buffett is not an expert in technology. He is not an expert in Nvidia, even though that he might be investing in that company. But Nvidia was a huge risk. Yes, the people who understood that technology made a lot of money, but Warren Buffett is simply not an expert in this field, which is why he was much more conservative with it, which is why he's most likely waiting for that golden opportunity. And those opportunities happen once in 5 to 10 years. Usually, such an opportunity comes when there is a new technology that emerges, for example, when the internet was created, or Bitcoin was created back in 2009 or 2010. I'm not sure exactly which year was that, but it was certainly exactly after the 2008 financial crisis, because the entire world was very frustrated that big banks screwed out and the government used taxpayers' money to bail them out, while the average American suffered dramatically. But it wasn't just the United States. The 2008 financial crisis affected the lives of every person on this planet, especially European countries that were heavily indebted as well, and many of them invested heavily in the US real estate market before the 2008, and they saw their investments plummet dramatically. In the last 20 years, we only saw a few great opportunities. The first one of them was in 2002 when the dot-com bubble burst. Some of these companies that you know today were sold at a fraction of the price. Amazon, for example, saw its price plummet by 97%, and a lot of other tech companies that today worth trillions of dollars were sold at a fraction of the price. Warren Buffett wasn't exactly an expert in tech companies, which is why he did not take advantage out of it, but certainly people who understood technology bought a lot of these stocks. You could have purchased Netflix, or you could have purchased Amazon or any other stock, or even Apple and Microsoft were selling at a fraction of the price. The people who could see how technology will change the world in 20 years, these are the people who made billions of dollars out of these investments. Now, another great opportunity that Warren Buffett did take actually advantage of was the 2008 financial crisis. You look around and everybody today is complaining about house prices. And I perfectly understand their complaints because house prices got entirely out of control. But in 2008, in 2009, and even in 2010, people were not buying houses at a fraction of the cost that they use today. When the housing market crashed, people sold their houses literally at a fraction of the price. You could have houses today that worth like $500,000 were sold for $80,000, $90,000 back in 2008 and 2009. So if you had cash, if you actually wanted to profit and buy your dream house at a fraction of the price, the 2008 financial crisis was the golden opportunity that was presented once in a lifetime. The reason that BlackRock and Blackstreet and other private equity corporations are so much into the housing market is because the 2008 financial crisis provided them with once-in-a-lifetime opportunity. So they purchased so many houses at a fraction of the cost, and today they are collecting so much in rent and making more money than you can possibly imagine. Now, another great opportunity that happened was as recently as 2020. When the entire world shut down its borders, it seemed like it's the end of the world. How is it possible that we're literally closing borders, as if the entire globalization that happened over the course of human history just came to an end? But if you understood anything about human history, and if you understood anything about the American stock market, you would know that that was not the end of the United States, and that was simply a dip for a very short period of time. So whoever bets on the fact that America is going to make it and will come out of this pandemic even stronger made a lot of money. These people made literally billions of dollars. The S&P 500 alone is up by 167% since the dip of 2020. That's how much money you could have made if you actually believed in America and believed in the stock market, and you threw your money into the stock market back when everyone else was running away from the stock market.
The capital very well deployed and much better than in an index fund. And so we're operating on the basis that we will get chances to deploy capital. They will come in clumps in all likelihood. And they will come when other people don't want to allocate capital.
Even Warren Buffett is making it clear that we are ready to invest when everybody else does not want to allocate capital. These opportunities will come. We are sitting on so much cash and everyone else is afraid. That's when we are going to throw our money. Nobody actually knows when that next opportunity is going to happen. It might happen next year, 2 years from now, 3 years from now, because this everything bubble that you are going through, on one side, it seems like it's never going to burst because the US government is creating so much money, which is inflating the entire market. On the other side, there must be a limit to how high this can actually grow. And when we reach that limit, the entire thing could actually collapse. The real question comes back to you. Are you ready for this opportunity? Have you prepared yourself for this opportunity? Do you have enough cash that you can deploy when that opportunity is going to present itself? Have you studied? Have you learned how to pick those companies? Have you spent enough time to educate yourself and get the right tools to know which of these companies you should be buying when everything is crashing? Well, if you haven't made that yet, then you haven't prepared yourself for the biggest crash of the 21st century. Here's Warren Buffett's strategy. Yes, he is sitting on $350 billion, but about $300 billion of that is invested in treasury bills, which means that he simply loaned that money to the US government and he is receiving a ton of interest. And if you look at the treasury rates, they're about 4 to 5%, which are way lower than they have been in the last 2 years. Back in 2022 and 2023, these rates were about 5%. So for every $100 billion that Warren Buffett is investing in treasury bills, he is literally receiving at least $5.5 billion in pure cash from the US government. And at the end of the tunnel, he's money is guaranteed and he will take it back from the US government. So basically, he's been making around 14 to 15 or even $17 billion a year since 2020. He's just increasing his cash pile and is getting the Berkshire Hathaway ready for the next great opportunity. And now the question is to you, are you ready for this great opportunity? And what is the best strategy for you? If you haven't developed yet a strategy and you don't know where to start, but you really want to take advantage out of it, then check out the first link in the description of this video. You will get a step-by-step guide from my team that will help you to prepare yourself for this great opportunity. So maybe this is going to be the turning point in your life. Thanks for watching, and I will see you in the next one.